There were some, maybe 2 months ago, there was a presentation here about algorithmic trading. Was anyone here? Was this professor, I think? He was talking about algorithmic trading, automated trading. They use moving averages. The moving average is just the blue line that I'm showing you. And it's a very nice thing to trade about. You buy there's a buy signal, will show signals. And you can put on as many trends as you like, but usually you put in a short-term trend, a short-term moving average, and a long-term moving average. I added different signals. So you will typically buy. I'll tell you a bit about the differences between these two moving averages, but you can trade and you can do very well. And there is a lot of automated software coming for trading algorithm with moving averages. Here you see another perfect buy. If you bought when this big arrow came, it just means that the averages crosses. So just an example of a good buying from moving averages. On our page, we actually calculate how much can you expect the stock to be moving between the averages. So in this case, the 35-day moving average is the long line. You can expect to gain around 5% every time you give a buy signal from the moving average. And it's not that much when it's a sell signal. But you can trade with this. 1% now, 1% then. It all becomes money at the end. This golden cross, we are still talking about moving averages, is when the short-term moving average is going over the long-term moving average. You get this combination. It's called a golden cross. There you can make, from that you can make very good money. But again, another lesson, you shouldn't expect it to last forever. I read a lot of articles where they prove that, these golden crosses, they don't produce anything. They measure them 1 month later. What happened 1 month later? 3 months later, the stock went down. But it is just a signal, and you trade it for as long as it's good. So you don't buy because there's a moving average signal, and you just stay till next year. You buy it because it's a moving average signal, and you put your stop loss, and you look for signs when to sell. Back in 2007, I enhanced this signal. So what you will see is our version of the signal. I did a combination where I put the price line, also not just the moving averages, but the price line too, in combination. And you can see it listed as a golden star. The conditions for this is just that the moving averages has to cross each other at a certain point, at a certain way in the price line. If you did the trading just by the moving average signals, the golden crosses, you would have bought there, you would have sold, and later bought there again. With the golden star, you only buy once. Just to show you some statistics. Right now we have 200, from the period of 16th of December to the 14th of December, we have found 273 golden crosses in 5,127 stocks, because that's what we analyze. So around 5% of them. The other moving averages, which these auto trading boots use, they produced for the moving average 7 and 35. It's technical, but still, there is 40% buy signals and 33% buy signals. And we only have 5. And I have done a lot of testing on these, and these signals usually produce quite much gain. I actually had anything from 50 till 240% on it. Just an example of these crosses when it occurs, how it looks like. On the other hand, you have something called a death star. It's just a combination where you get a heavy, heavy cell signal. It's just the opposite. It just tells you it's a very, very strong signal to sell. And whenever you get into stock trading, after a while you just want to gear up your money, so you start shorting. You sell stocks that you don't have, and then when you really start losing money. The differences between the sell signal from the Death Star and the golden crosses can be seen here. From the Death Star told you this stock should be sold. It's a highly sell signal. If you use the moving average, you will sell at this point.